I'd like to tell you a little bit about our investment philosophy, and that's really how we pick good businesses to invest in and how we put it into a portfolio that makes sense and also has risk controls. As I mentioned earlier, we're very much bottom-up driven, so therefore really our goal is to find good businesses that can deliver what we feel is sustainable growth and at a reasonable valuation, and more often than not, we look for actually opportunities where we feel there's going to be multiple expansion. And really where this comes from, again, what drives our bottom-up ideas is our research, which I highlighted earlier, and also our ability to look at certain businesses and industries in a more global context. And when we find these good businesses, the way we put it into a portfolio, our portfolio construction is very much indexed in unconstrained. And by that, what I mean is that we don't start with the index. We start with where our highest conviction ideas are. And so therefore, we really invest in all kinds of market cap companies. We tend to look like we have high tracking error, but that's really more of a function that we feel perhaps the index is not really proactively representing the investment universe here in the region. And also, our portfolio construction is very diversified in terms of risks and the kind of factors that drive return. And we are not index constrained, but we are very index aware in that we use the index as a way of benchmarking whether or not we are taking any unintentional risks. So again, our philosophy is very much find good businesses to invest in. Don't let the index be the constraint. Use the index as a risk control tool and really exploit the full universe across the cap range and across different sectors that is represented in the stock markets here in Asia. So really when I think about our universe in Asia here, we think our universe consists of about 1,300 companies, and that's again because we're willing to go down the smaller cap scale. Our universe is actually quite large. But really through an easy process of elimination, we can narrow that universe down at any one point, at least currently, to about 600 companies. And our research analysts, in general, cover and rate approximately 30 to 35 stocks each analyst. And on top of that, they would monitor another 10 or 15 stocks. So really between the 11 analysts and myself, the 12 of us, can really monitor very well about 500 to 600 stocks here in Asia. But really our research pool where the analyst spends most of their time is the stocks that they rate. And right now that's about 230 names in the region. So our ideas come from all levels, and we generate ideas really by seeing lots of companies, talking to a lot of industry experts, doing a lot of cross-referencing. And sometimes the ideas come from the strangest places. For example, sometimes we go see a company and we see their competitors more for a check and control, but actually we end up finding that that's actually quite an interesting business and end up investing in that business. And really the ability to piece and triangulate all the informal sources of the data together is very important. And our analysts spend a lot of time doing this. And then again, as I mentioned earlier, from a portfolio construction perspective, the New Asia strategy will have on average any point in time between 80 to 120 names. So really those names should generally consist some of the highest conviction ideas from our research analyst. But also the PM has some freedom to go outside of what the analysts cover. And again, because these markets are so dynamic, I as a PM will invest in stocks that are not yet rated by the analysts, but really most likely will become rated by the analysts over time if the business or that industry grows its economic share here in Asia. We don't do asset allocation or make macro calls at T. Rowe Price, but that's not to say that we totally ignore the macro analysis. But I think most of the time our macro analysis is really imputed into the bottom-up micro assumptions in our stock financial analysis. So although we don't do directional macro calls and let macro decisions drive our asset allocation, it is very much implied and imputed into our bottom-up analysis. So therefore, our investment philosophy, as you can tell, is very much focused on finding what we think are the highest growth opportunities in the region, but also businesses that have high growth, but also rising and high returns on investment. And really the key is to find management team that can really execute the strategy and the vision of the business model. And we would construct our portfolios very much based on our highest conviction ideas rather than based on the index. I'd like to tell you a little bit about the New Asia strategy and how we're currently positioned. As I mentioned earlier, we are very much an index unconstrained strategy. So as you can tell by our current positioning, both at the industry and country level, we will take some high risk in terms of taking some bets against the index. That's not to say that we intentionally want to take bets against the index, but we do feel that the current MSCI Asia ex-Japan index doesn't necessarily represent the true investment universe here in Asia. So for example, at the country level, we tend to look like we have very high representation in India, for example, where we feel actually the benchmark itself is very much underrepresenting India. And to some extent China as well, whereas we tend to have a lower weighting versus the benchmark in countries, some of the more mature markets in Asia, such as Taiwan, Korea, Hong Kong, where we feel the benchmark may be overrepresenting the investment opportunity. Secondly, you can also see that at sector level, similarly, you can see that we have a very high overweight versus the index again on some of the more consumer-driven types of sectors, as I mentioned earlier in our conversation. And again, it's not so much that we don't like some of the other sectors, but we feel that this is very much a secular growth sectors here in Asia, and the index, again, is really underrepresenting this opportunity. But part of the reason why is many of the consumer-driven types of businesses here in Asia tend to be in the small mid-cap area, where again the index will tend to underrepresent. But because we're willing to invest across the cap scale here in this strategy, we feel that we're in a better position to capture the secular growth opportunity here. And we tend to be less weighty in areas like materials, financials, telecoms, where we feel many of the businesses are a bit more mature. And also perhaps the index has too much representation in these areas. So because we are not an index constrained strategy, we will really invest where we feel the best growth and secular opportunities are, and they tend to be in the more emerging economies of Asia and also in the more domestically driven types of businesses here in Asia. So in conclusion, I would say that our strategy here in Asia has several advantages. Obviously, most important is our experience level, both in our research team and also on the portfolio management side, and also our global research platform, so that we can really triangulate information on a global basis when it is relevant. And also from our unconstrained approach, so that we can really invest across the cap scale and not be constrained by the index. And we feel that approach will give our investors the best exposure to the future growth opportunities in Asia.